What if I told you that millions of people around the world were secretly funding a billion-dollar company without even knowing it? In 2007, two broke guys in San Francisco blew up air mattresses and made $1,000 in a weekend. That weekend changed everything. For 15 years, Airbnb sold the world a beautiful dream. Your spare room could make you rich. 5 million people believed them. Teachers, nurses, parents bought second homes thinking they had found financial freedom. But something was happening behind the scenes that nobody talked about. By 2024, Airbnb was making $12.2 billion. The average host? Only $14,000 before expenses. The math does not work. The dream was never real. And the truth about what really happened will change everything you thought you knew about the sharing economy. In 2007, Brian Chesky and Joe Gebbia were two broke guys sharing an apartment in San Francisco. They could not pay rent. Then they saw a design conference coming to town and realized something simple. People needed places to sleep. They bought 3 air mattresses, called it Air Bed and Breakfast, and posted it online. 3 strangers paid them $1,000 for a weekend. That $1,000 felt like pure freedom. It felt like proof that anyone could be a business owner. The idea was so simple, it seemed impossible to fail. When they told this story to the world, millions of people listened because the dream felt real. By 2019, Airbnb had grown to millions of listings across 220 countries with $4.8 billion in revenue. Imagine you are a teacher with a spare bedroom. Airbnb tells you, rent it 3 nights a week at $150 per night and make $23,400 a year. That covers your mortgage. That is freedom. Millions of people like you believe the math, but the platform was not telling the whole story. It was not talking about cleaning costs, maintenance, taxes, or the fact that Airbnb was taking a cut from every booking. Researchers noticed something disturbing. Airbnb owned nothing but was becoming one of the most powerful companies in the world. For nearly a decade, it seemed like the promise might be true, but in March 2020, something happened that would expose the entire system. March 2020. COVID-19 shut down the world. Airlines stopped flying. Hotels closed. Tourism evaporated overnight. Airbnb, a company that made 100% of its money from travel, lost 80% of its business in 6 to 8 weeks. CEO Brian Chesky said it felt like watching a bomb explode in slow motion. For hosts, this was catastrophic. They had mortgages due on second homes they bought betting on Airbnb income. Suddenly, 0 bookings, 0 income. But the bills kept coming. A host in Colorado bought a $400,000 second home with $2,200 monthly payments. March 2020 hit. No bookings for months. She was bleeding $2,200 every month out of her own pocket. Airbnb's revenue dropped from $4.8 billion in 2019 to $3.3 billion in 2020. The company cut 1,900 jobs, 25% of its workforce. It took emergency funding at a much lower valuation. Investors panicked. The dream was dying in real time. But here is the twist. While hosts were drowning, Airbnb made a decision that would save the company but not save most hosts. The company pivoted. It stopped marketing exotic getaways and started pushing longer stays and nearby trips. Airbnb survived by abandoning the short-term rental dream that made it famous. The conflict became clear. Airbnb needed to survive. Hosts needed to survive. But the platform's survival did not require host success. By 2021, something miraculous happened. Airbnb roared back with numbers bigger than ever. But when hosts looked at their own earnings, they noticed something terrifying. The company was making more money than ever, and they were making less than ever. Why? In 2021, Airbnb bounced back harder than anyone expected. Revenue climbed to $5.9 billion. 2022, $8.3 billion. 2023, $9.9 billion. By 2024, a record $11.1 billion. The stock price soared. Investors celebrated. Airbnb was the comeback story of the decade. But hosts felt something different. They were not celebrating. Because as the company's numbers climbed higher, their own earnings stayed flat or dropped. Where was all that money going? By 2024, Airbnb had 8 to 9 million active listings run by 5 million hosts worldwide. The platform processed $80 to $90 billion in bookings every year, but Airbnb's take rate was 13 to 14% of every booking. That meant the platform was extracting $10 to $12 billion from the travel market without owning a single room. Imagine you list a room for $100 per night. Airbnb takes 3%. The guest pays a service fee. The cleaning fee is $75. After all fees, you are left with maybe $40. The platform is making as much as you are on your own property. Airbnb designed this system on purpose. It hides the fees in different places: host commission, guest service fee, cleaning fees. By the time a host sees what they actually earned, the money is gone. By 2024, Airbnb's operating margins climbed above 80%. For every dollar the platform made, 80 cents was pure profit, because Airbnb does not build buildings, does not hire staff, does not maintain properties, it just takes a cut. But something was breaking behind the scenes. In cities like Phoenix, Austin, Orlando, hosts were experiencing a collapse, not of Airbnb, of their own dreams. By 2022 and 2023, cities across the world woke up to a massive problem. Airbnb was crushing their housing markets. In Barcelona, entire neighborhoods had been converted to short-term rentals. In New York, landlords were kicking out long-term tenants to list apartments on Airbnb at higher nightly rates. In Austin and Phoenix, investors were buying houses specifically to flip them into Airbnb listings. The anger was real. Teachers could not afford to live in the cities where they taught. Nurses were commuting an hour to work because they had been priced out of their neighborhoods. Families were being evicted because landlords wanted the Airbnb money. Research showed that heavy Airbnb activity could push up local rents by measurable amounts. Cities responded with bans, restrictions, and regulations. Barcelona limited short-term rentals. New York required permits. San Francisco cracked down hard. In Austin, a family wanted to rent an apartment for $1,800 per month, but the landlord had listed it on Airbnb instead, renting it at $200 per night. At full occupancy, that is $6,000 per month, so the family could not rent the apartment. They had to move farther away. Something unexpected happened. When cities cracked down on Airbnb, it did not make housing more affordable. Studies showed that bans rarely solved the housing crisis. Why? Because the problem was not Airbnb alone. It was that housing was scarce and being treated as an investment asset instead of a basic need. The conflict was brutal. Hosts had joined Airbnb to make money, but their success was making their own neighborhoods unaffordable. If you are a teacher hosting an Airbnb, you are contributing to the housing crisis that makes it hard for other teachers to live in your city. By 2023, there were more than 1 million short-term rentals in the U.S. alone. Airbnb had fundamentally reorganized the housing market, but the worst part was still coming. Here is how Airbnb makes money. Every booking, every guest, every night, the platform takes a cut. So Airbnb has zero incentive to limit supply. It actually wants more listings, more options, more volume. So the company kept pushing. It advertised. It encouraged people to list. Millions of people listened. By 2023, the supply of Airbnb listings exploded beyond what demand could support. Hosts who had joined in 2015 or 2016 watched in horror as their earnings collapsed. In Phoenix, average revenue per listing dropped by 46 to 50% in 1 year. Why? Because supply had exploded. There were now dozens of listings on the same street, all fighting for the same guests, all cutting prices in desperate price wars. Nick Gurley, an analyst at All the Rooms, warned of a wave of forced selling coming. Hosts who had bought second homes assuming the easy money era would last forever were now facing a choice: sell at a loss or convert back to long-term rentals. Imagine you bought a condo in Phoenix in 2018 for $300,000. Your mortgage is $1,080 per month. You calculated that Airbnb bookings at $180 per night would easily cover it. By 2023, the average nightly rate had dropped to $100. Your occupancy was 60% instead of the 80% you had counted on. You were losing $300 per month. The reality, Airbnb knew this was coming. The company's internal data showed the pattern, but it kept promoting hosting anyway. Because even if individual hosts were losing money, the platform was still taking 13 to 14% of every booking. More volume, even at lower prices, meant more revenue for Airbnb. Some hosts started creating multiple accounts to list the same property multiple times, trying to game the algorithm. When people start cheating the system, it means the system has failed them. Supply exploded, prices collapsed. Hosts were bleeding cash, but they did not realize the worst part yet. When Airbnb marketed hosting, it used the word passive income. Make money while you sleep. Let your home work for you. But the reality was completely different. Hosting on Airbnb is not passive. It is a full-time, relentless 24/7 micro-hotel business. Hosts were answering messages at midnight. A guest's Wi-Fi was not working. Fix it. A guest arrived and the shower was broken. Repair it between checkout and check-in. A guest left a 3-star review because the coffee was not strong enough. Your rating dropped. Your home was not just a home anymore, it was a business, and every guest was a performance review. The typical US host earned only about $14,000 per year from Airbnb in 2022 and 2023. That sounds like supplemental income. But that number came before mortgage payments, utilities, maintenance, insurance, local taxes, and cleaning costs that the platform's gurus had waved away as details. You list a bedroom for $120 per night. You get 20 bookings per month. That is $2,400 gross. But after Airbnb's cut, guest service fees, and $60 cleaning fee per stay, you are left with about $1,500. Then subtract your mortgage, $800, property tax, $150, insurance, $100, utilities, $100, maintenance, $100, and repairs, $80. You made $170 that month, and you worked every night coordinating cleaners, answering messages, and managing complaints. The platform creates an illusion. The app shows gross revenue. It does not show costs. So a host could see $2,400 this month and feel rich while not realizing that $2,200 of that was going to expenses. Airbnb hides the math. It shows the dream, not the reality. Some hosts started hiring property managers to handle everything. They paid 20 to 30% of their revenue to a property manager. At that point, they had no income at all. They just had a debt-holding property that used to be their home. Hosting was not passive, it was relentless work, and when the dream finally broke, something deeper broke too. Airbnb built a hidden architecture of fees that guests do not see until the final checkout screen. A nightly rate might be $100, but by the time you add the cleaning fee, $75, the service fee, 14%, the damage protection and local taxes, the total is $200. This is called fee shock. A family of 4 wanted to book a weekend in Phoenix. They found a nice listing for $100 per night. They got excited, 2 nights seemed affordable, then they clicked checkout. Cleaning fee, $75, service fee, $28, taxes, $35, total $238 instead of $200. They felt betrayed. They booked a hotel instead. The Airbnb host got 0 bookings. A 2022 study of 1,000 U.S. stays found that the median cleaning fee was around $75 per night. Nearly 40% of listings charged cleaning fees equal to 20 to 30% of the total price. Guests were paying nearly 30% extra just for service fees and cleaning. You want to rent an Airbnb in Austin for $120 per night? You think it will cost $360 for 3 nights, but the total is $552. The fees added $192. That is a 53% markup. You could have rented a hotel room for $140 per night and paid less total. Airbnb designed this system on purpose. By hiding fees until checkout, the platform makes listings appear cheaper than they are. Guests book based on the nightly rate they see first. They do not comparison shop based on total price. By then, the guest is committed to the booking. Reviews started mentioning the shocking fees. Guests felt scammed. Hosts watched their occupancy rates drop because people were booking hotels instead, even though hosts had no control over Airbnb's fee structure. The platform was killing its own market by hiding the true price. Airbnb's service fee is about 14 to 16% for guests. That means if a guest's total booking is $500, Airbnb makes $70 to $80 just from the service fee. The platform takes money from both sides, from the host commission and from the guest service fee. Even with lower occupancy rates, the take rate was high enough to keep profits climbing. The system was designed for Airbnb to win. Everyone else was designed to lose. Let's do the real math. Airbnb books roughly $80 to $90 billion in gross bookings every year. The platform takes about 13 to 14%. That is about $10 to $12 billion extracted from the travel market annually. Airbnb's revenue in 2024 was $11.1 billion. That is the platform's share. But where does the rest go? To the hosts? No. Hosts look at these numbers and feel betrayed. They realize they are not partners with Airbnb. They are suppliers. They provide the properties, the labor, the customer service, the cleaning, the maintenance. They take all the risk. They carry the mortgages. And Airbnb takes roughly the same amount of profit as they do, without owning a single house. Airbnb's operating margin is above 80%. That means for every dollar of revenue, 80 cents is profit. The company has almost no costs because it does not provide the goods. Everything else is hosted, provided, and maintained by hosts. Airbnb is essentially a software company making software profit margins while operating a hotel business. Here is the breakdown. Airbnb books a $400 stay. Airbnb takes $56, 14%. The host receives $344 before their own costs. But from that $344, the host must pay mortgage, $200, property tax, $50, utilities, $30, cleaning and maintenance, $40. The host makes $24. Airbnb makes $56. The host did 90% of the work. Airbnb did 10% of the work. And Airbnb makes 2.3 times more profit. Most hosts never do this math. They see the gross revenue and think they are rich. By the time they realize the costs, they are already locked into mortgages and unable to exit without selling at a loss. Airbnb designed the system so hosts would discover the truth too late. In 2024, Airbnb reported free cash flow of about $2.5 to $2.7 billion. That means the company does not have to reinvest most of its profits back into the business. It can just take the cash. This is only possible because Airbnb does not own properties and does not employ service workers. The hosts do all that. Airbnb just collects the cut. By 2024, the situation had become desperate for millions of hosts. They were finally waking up, and they were starting to ask the question that would break the dream completely. Should I sell? Should I get out? By 2024 and 2025, online forums filled with hosts asking desperate questions. In Phoenix, in Austin, in Orlando, hosts were posting screenshots of their earnings charts, lines that bent downward, revenue that dropped month after month, occupancy that slid. And every month, Airbnb still took its percentage whether they made money or lost it. These were not just numbers. These were people's life savings disappearing. A host in Austin had sunk $100,000 of her own money into upgrading a property. She had taken out a second mortgage. She had promised her family that this would be the investment that changed everything. Now she was bleeding $500 per month, and she could not sell because the property was worth less than she owed on it. She was trapped. By 2024, there were more than 8 to 9 million active listings on Airbnb, but in many markets, occupancy rates had collapsed. In Phoenix, a property that was booked 80% of the time in 2019 was now booked only 50% in 2023. Some hosts started converting back to long-term rentals, others just abandoned their listings, and a third group was planning to sell and cut their losses. A host in Orlando had bought a small house to list on Airbnb. Mortgage, $1,500 to $12.2 billion in 2025. Airbnb survived, thrived. But the dream that any spare room could be a reliable path to freedom, that dream died. It died in the spreadsheets of 5 million hosts watching their earnings collapse. The platform was not designed to help hosts. It was designed to extract value from them. Airbnb just left everyone else behind. The Airbnb story is not about a company failing, it is about a promise failing. Millions believed they could belong anywhere. Instead, they discovered they belonged only to the platform. Subscribe for more platform economy exposés. Have you experienced this yourself? Share your story in the comments. The more people understand how these platforms really work, the fewer will be deceived by the next dream.